Good morning, everybody. So yesterday was your typical go nowhere day after the wide range bar warming. It's not a textbook 1, 2, 3, but look, it doesn't have to be perfect textbook. The whole idea behind a 1, 2, 3 pattern is a power bar, wide range bar, and a number two bar consolidation day that creates a support and resistance area. And the pattern, in this case, a bearish one, suggests further downside if it breaks the low of the narrow range bar, which we'll see if that happens today. And of course, it can take out the high of the narrow range bar, and there's a void above. And we talked about this, I believe, last week about wide range bars being the weakest link because there's no overhead resistance. Now, that doesn't mean it can get all the way back up to some resistance, but we have seen in the past, like for example here, wide range bars being negated as prices entered the void. I'm not going to go back to the intraday charts, but you can go and look yourself. You can see it, here there was a wide range bar. There wasn't an inside bar. It just reversed the next day, and the next day it just reversed. But sometimes you do get those inside days, and then prices retrace deeply. So the reason it's the weakest link is because in this case, there's no overhead resistance and it creates a void above, and prices can rally back into that relative ease. Of course, you have to take into consideration what the existing trend is. In this case, it's no longer up. Prices have broke down. So the trend is to the downside. Still, you can get retracements, and we have our other concepts or rules. Stay in the lower, the close to stay in the lower 50%, and ideally in the lower third. So could it rally up to the 50? Well, of course, but that doesn't mean it's going to close there. We shall see. You can see where the 50 is. It's in the area of that minor resistance, which is more clearly seen on the hourly time frame over there to the left. So we'll see what today brings. Right now, you can see it's basically up a little bit, up at the top of the intraday range. You can see the 5, the 60, and the 15-minute. And yesterday was pretty erratic, basically destroying short-term traders, potentially that don't have automated money management or any money management at all, with the spike up taking out these pivots and then spiking back down and then spiking back up again. And it's just a nasty frog in a blender pattern, as I call it, just whipping back and forth again, or commission generator, call it what you want. It's ugly. So we'll see what today brings. As far as economic numbers, there's some oil reports coming out in a little while. There's the beige book at 2:00. Should be a non-event, but we shall see. Yesterday you had Powell speaking, and that's why that intro was the market's coming to grips that a rate cut isn't coming anytime soon. So that balloon is getting deflated, which have advanced the markets throughout this whole time. And so the big thing is going to be earnings reports as they come out, and then just ignoring all of the noise of economic reports and who's talking and so on and so forth, looking at technicals. The reason I say a buy signal may be a few weeks ahead, because just, the concept of technical analysis, knowing everything that's going on, we have an uptrend on the weekly chart. We had this breakout bar failure, which did happen. At the time when I mentioned it, I wasn't certain it was going to happen, but it happened. And now prices are heading down toward this support point, where it's your historical strong trend and pullback into this area. No measuring retracements or any of that. It's an area. It might go a little below it or give and take. You got a 500, a big whole number there. You can see on the daily time frame, there's major support. There's two levels that are relatively close together. There's an unfilled gap. So, coming somewhere in here, which is probably going to, I think, could take a few weeks. We'll see. 2 weeks to get down there. It may get down there relatively quick, but the stabilization could take some time where it fills back and forth and the markets digest whatever it's going to digest as far as news. And we'll then look for patterns, like something could be something like this, which just turn it upside down and break down failures, bottoming tail bars, whatever is going to happen. If you apply bar by bar analysis, you'll figure it out. And of course, we will review that pre-market in our letters to provide guidance. So that isn't going to happen today. That's for sure. So right now, the bias is it continues to move down into the void. And at some point, it'll begin to stabilize. And as far as this morning goes, the markets aren't doing much of anything, probably just waiting technically for something, maybe get a little bit of rally and then back down again. And eventually the bias is that it comes somewhere down into here. Right? So SPX, obviously yesterday didn't even come close because the markets didn't move. Things got a little tighter because of yesterday's narrow range. Will it get up here? Highly unlikely, not without some giant news coming out to get up through a 50 MA. So while I give these strikes, depending on, price movement, I mean, this is the extreme, right? You can get maybe a little tighter, 45, and on the downside, maybe 90. But this is down below 5,000. If it was to jump, go down there today, there will be buyers. Unfilled gap. The 20 is down there, 100 MA. So credit spreads are just a probability assessment as to where prices won't go. Plain and simple. Then what's your time to expiration? Is there premium? So when we look at individual stocks and weekly options expirations, and you have to go out to Friday, it's like, what's the probability of prices going to a certain level up or down in a relatively short period of time? You can do credit spreads out 30 days or whatever. That's a choice. And again, what's the probability? So is it going to come down here today or is it going to come up there today? I think not. So pick your spot. Transport broke down and headed down to the bottom of the trading range. And I suspect that we'll get there or lower today with JB Hunt, going down as much as it is. I think United Airlines was up a little bit, so it may be a push and pull there, but we'll see what happens. The main focus here from a market perspective is, what does it do? Does it hold down here? If it breaks below it, at that point, how far below? And does it come all the way down here? This is going to be a pivot on a smaller time frame, some support. And so as I scroll over there, you can see this level there. There's an unfilled gap. As it says, look to the left. So right now it's, in this area, it should continue to go lower. And we do every day. We'll just assess, what the patterns look like when they get to a reference area, plain and simple. And Q's, big, rolling overhead top, little narrow range yesterday, same thing, up a little today, unfilled gap, so on and so forth. There it is. All right. Now, as far as this buy setup, it's not as clean as the S&P. So, you've got obviously a bunch of tech stocks, and with that level of overhead resistance, just thinking out of the box here, what would we like to see happen? I'd like to see it get a little ugly. Why? Well, because if it can come down here, right, unfilled gaps and so on. If it can come down into this area, it's going to create an overhead void and get far enough away from some of this. So that's all in development mode. We'll just have to see how this plays out. But look, there's an unfilled gap, there's price support. So it's unlikely it's going to collapse to go down there. We kind of wish it would, but I think it's unlikely. It does have a lot of overhead supply, meaning as this went up and it started to, distribution, whippiness, and so on, there was buyers here thinking higher, rate cut, 6 rate cuts, 3 rate cuts, and so on, where it could have tightened up and went higher. Now it didn't. So supply, resistance, supply, interchangeable words. All right, IWM, basically, risk off now, small caps, speculative, broken down. Next level of support, look to the left. Odds are it's coming down here to the 200. Stabilized here today for now. It's got an overhead void, little choppy price action until more information unfolds. There's a few other sectors, it's going to be the same, retailing that broke down. It was looking great here, coming down to a major support level. Financials, as you know, broke down with JP Morgan, bearish, but uptrend, wherever it's going to come down to, there's the 20 or the 100 on the daily. Down here at support, more significant support somewhere down here. We look for it to begin to stabilize. Energy still holding up, pulling back, should form a buy setup there. And interest rates, not good, down here a little bit this morning. So markets are stable. See it pulling back. You can see the bar there, but the big spike up coming towards some resistance. Obviously not good. There's your 10-year, the 5-year pushed up and coming up to the same resistance, and the 3-week, 13-week, I should say. We're going to keep an eye on this to see. I got an alert up here. Does this begin to spike higher? Right now, it's just chopping back and forth. So they just don't know, right, what the Fed's going to do. Stand pat. Does more data come that makes or implies a rate increase? Let's hope not. Then it really could get ugly. And yeah. Just another measure of risk off, junk bonds. And I talked about this in the letter for weeks. It's like the market's going up. Why isn't this going up? Like the small caps, because this typically goes up. Measure of risk on, risk off. Clearly risk off. Now it's down here at the support in the 200. Possibly things stabilize there for a while. So, again, just another way of assessing the overall broader markets and what's going on under the hood. This is not a good sign. Right? This is good, right? We're getting a little extreme to the downside, implying that a bounce could be, not too far off. But call buy. This is moving up toward a bearish level right now. It's neutral. It's coming up to this prior area where it turned down from. So ideally, what we'd like to see is the markets come down into this unfilled gap area, an extreme amount of put buying, breadth is at an extreme, and we get a sizable bounce, and then we'll see. Just looking for all of these things to line up to give us high probability opportunities, which right now we don't have that for a bullish bias or turn. So we're looking for things to move lower to where internals into market analysis patterns and all of that can set up. Bitcoin down a bit. Mentioned yesterday, it's on this major support and the 50 MA. Trading range, overhead supply. We'll see what happens. Essentially that's the story. No matter where we look, we'll see what happens as it unfolds. Oil on the 20 pulling back a little bit. You know, some bombs. Israel shoots off some bombs in Iran. This thing's probably going to spike up. So we'll see. SMHs, not too bad. I mean, compared. So a bit of a positive there, just jiggling around. It's on major support, the rising 50, not doing too much this morning. Waiting to see, what it'll do here. Does it begin to stabilize? You can look at NVIDIA and the other stocks, AMD, that was holding up, that broke down. You can look to the left there and see it's near those pivots. It's up here a little bit this morning. So, maybe a little bit of a bounce there. Keeping an eye on that. And yeah, this is other thing. No matter what we look at, we know what our intermediate term bias is, and the short term bias is more or less. We got a lot of 1, 2, 3 patterns that suggest lower. We'll see if they break. Markets are holding here for now. Maybe we get a little bit of a bounce. So day trades, for the most part, and some swings if the 1, 2, 3s trigger. We'll see what happens. All yours, Dan.
Good morning. As always, we talk about our bias into the close for the next day. And our bias was, just saying it a little different than Greg was talking about, bear 1, 2, 3s, stabilization, 15-minute chart. If we opened relatively flat, which is or slightly up, slightly down, a breakout here with a void, yeah, day trade longs. But so if we take out yesterday's high, that's going to be a higher daily high bar. So ideally, this is what Greg calls a factory work. We wanted to stay in the lower 40%. And if we close with a topping tail, then we have a textbook 1, 2, 3, 4. Because a 1, 2, 3, 4 trades over the prior inside bar and then cracks the low. So how deep we go here is going to be very telling. And if we're day trading, well, we know how to manage and trail. Definitely not swing trades. All right. A couple of alarms here. Goggle. Alex, buy setup. Oil. I remember you saying you took it off your watch list, and I said, why? I'm keeping it on mine. My alarm went off. 1320 looks great. Let's see if that can hold. I have it on another computer. Lilly alarm. We shorted that yesterday. They had some positive news on a drug, and we just got to keep our stuff. IZM, look at this catastrophe. I even posted this in our Facebook group over the weekend, and I put it in the letter too, saying we will be watching this every day for a climactic sell setup opportunity, which this is textbook. Just trade under prayer bars low. My alarm at 52 went off twice yesterday. So look at that. Was unable to get through that. Slowing momentum, doji bar, far from the 20. Just beautiful Climo setup. Trade under prayer bars low. But you're capping down to $13. You kidding me? That looks like a bio, the way that's trading. I have no idea what the news is, but the gap made it untradeable, unfortunately. Pelletier, we're short. I had an up alarm, but it's still fine. Gentex, we're short. Trail mode, I had an up alarm go off, but I don't see any prints. Is that what it is, Patrick? I know nothing about that company. All right, those are all my alarms. Actually, Microsoft alarm just went off. We have a call spread, the 4.25. So that was just an early alarm. Let me reset it. Set it at 420. Earnings. Let's see what we got. UAL. This was the only one I was considering selling a put spread. I said I would do the 38s, but it was only like 27 cents or something like that. But that's a nice gap, but nothing to do with it. Interactive broker was down. Now it looks flat. There's nothing to do now. OMC 93.40 bullish gap, but nothing to do. See? And JB Hunt, big old gap down, far from the 20. Have it in this bottom right. So this far from the 20, excessive gap. So Don, this is a great put spread idea, 30-minute high as a gap and snapper. I'm not talking about fish, snapper. I'm talking about gap and snapper. All right, KNX. I don't think this is earnings. So it's just going, going down in sympathy with JB Hunt. They're direct competitors. Volt was the closing breakdown. Daily weekly, 14 bucks. Far from the 20, no great entry. AMX flat, no pattern. PLG sloppy up a little bit, nothing to do. HWC up gap, but that's not liquid, so I ignore it. We'll come back. Asmel 935. That's a total gap breakdown. That could go a lot lower. I will set an alarm on that. No, I mean, I'll put it in a window. Abbott, that could be a 30-minute low trade. PLD, that could be a gap and snapper. I'm running out of space here. Live LD, USB, 39.20 bearish gap at the support, nothing to do. Travelers getting whacked. Now this would have been a tier 1 short if it gapped right to 219 or just a little lower. I'd say 218 to 219, and then we would short a 10-minute low. But gap's messing it up now. Too big. CFG, no pattern. FHN up a little bit, but no pattern. VFS just on a nasty downtrend, all time frames. That looks like it's heading to the graveyard. Baku up a buck with no pattern. All right, so that's it there. These are just watch items now. This is a day trade, 1, 2, 3. If it triggers, rock 1, 2, 3. I have alarms. Dash 1, 2, 3. I have an alarm. 1, 2. There's a ton of 1, 2, 3s. We spent a lot of time in the green room talking about the quality of them yesterday. Here's a kind of a 1, 2, 3 with slightly lower low, but still a void. That looks good. Fast, if anybody wants to watch that, that looks really good. Capri. Why am I watching you? Because the regulators saying they're going to block Tapestry's desired purchase of Capri. 38 bucks. It could working to be a Climo, but it's no hurry. I don't know what the news is on Autodesk, but that's a big old gap down. It's a real company. I'll see what it does. Wiza was ripping yesterday, we mentioned. Pre-market. It's ripping here again, but nothing to do with it. Goggle we talked about, IZM. Look at a little AMC I saw coming by the ticker. That's a Climo with a potent reversal on volume. Ideally, it would have given a 1, 2, 3 to trade up with a target of 20. KNX place, something's up with Children's Place here. I think this news was somebody trying to take them private, if my memory is right. And then it looks like that that kind of went to the graveyard. Now it's back up, but it's down a lot. And that's a void. So let's keep an eye on place. Myrna alarm just went off. I had an alarm right there, say 105, whatever. That's a put spread idea. UNH, yep, and crap. Well, no, that is not a gap and crap pattern. A gap and crap is a climactic sell setup with an exhaustion gap. This is a pro gap yesterday. No, it's not using our definition. Just because it gaps up and comes in does not make it a gap and I mean, I understand what you're saying, but we use gap and crap as a very specific daily setup. It's an exhaustion gap far from the 20. This is an igniting gap. But I'm with you. I'm clarifying, for people who don't ask questions. And then GPS, Alex mentioned yesterday, this is a Climo. So this would be more of a gap in snap. I talked about that snapper on, what was it, JB Hunt or whatever it was. So let's say this gap down to 19 and then took out a whatever 10, 15-minute high. That would be a gap and snap. And then here would have been a gap and crap if it gapped up instead of just going sideways and failing. All right, more watch list items up here. Twilio breakdown watch, PSN 1, 2, 3. Plants, a little sloppy. ECL is a beautiful 1, 2, 3 under yesterday's low. LYV alarm. LYV alarm got killed yesterday on some bad news. This could be another put spread idea, 30-minute high, LYV. VST alarm. Okay, are we in this? We have a lot of open shorts. Yeah, we are in this. We shorted it yesterday. Our stop is still far away. So wow, a tick is over 1,400. That is shocking to me with this meager gap. That is shocking to me. Wow. All right, VST, let me set a new alarm. WRB is a SAM IM trade. WRB, there you go. That looks great, Sam. Relative weakness. Continue, we had a long talk yesterday about at least what I like. So this one could be an exception of far from the 20 because of these bearish 5 bars. So yeah, so that I have zero idea. I'll tell you when I see it. There's no trade right now, Don. It snapped too much. There's no trade to me because it's not setting up in a way I recognize. Yeah, PFE, memory J&J also, look how similar those two dogs are. Postage, up alarm, it's an early alarm, but this one is still relative strength bullish, so let's keep an eye on this. Don, if you watch JB Hunt, I'm not.
It could set up in the afternoon at 2 o'clock, Don.
I'm gonna
Watch it on the 5 minute as we do and see if the 20 and the 60 come up under prices. It would have to go sideways for a while. So, I mean, if anybody was short, which would make sense if that they were, except for the risk of the earnings was under all the moving averages on the daily. So anybody you would think would cover those short positions and why it snapped up like it did.
Pre-alarm, but nothing to do with it. Wow, what a week, man. Like the pre-market, I said this was at $11. And it just got cut in half from that.
That's a bad day for people.
And look at the volume is already over yesterday's high. Here, I'm going to grab a screenshot. This is a beautiful Climo and beautiful volume example of how that volume sucked in the bulls. The suckers, it sucked in the suckers. What do you call that pattern, Steve? Sucked in the suckers. How, what do we got to come up with a name for that? Look at that volume. 4 frigging minutes. Incredible suckage going on there. Why don't maybe let's call it the rotor rooter setup. What do you think? All right, so KNX also bounced with JB Hunt. All right, Autodesk using pre-market data as a 180 reversal. This could turn out, I'm not rushing into it, but it could turn out to be a 30-minute high put spread down. A pile. All right, fast here I mentioned as a new short. This looks pretty good. I know it's far from the 20. I know we had that discussion yesterday, but I said it's also, I don't want fluid bars down. This 1, 2, 3, this 5-bar arrangement is telling me it's weak. So I'm making an exception of the far from the 20 issue. The pile, LW final. That's a bottoming pattern. I'm just, I'm not going to rush into it, but I'll put it on the list. When it's a bottoming pattern and the market's iffy, I'm in no rush. So I just as a default, I'm like, all right, let's see what it does, at least in 30 minutes. But I will give, if the markets were bullish, then I would be more aggressive. That's why I'm mentioning those two things together. $80 puts are only 10 cents for Friday. I would have thought they'd be, at least 55 cents. That's crazy low. All right, Apple 15-minute chart, not bad at all for a little scalp into the void like we were talking about yesterday. on, deep retracement, but it's on support. That's a nice 180 reversal using pre-market data. It's 936. Ideally, it won't go very far, and you can buy 15-minute high. But as always, stock don't care what I want. LDOS. Okay, if we're not in this, I like this one. Let me see. I forget. No, we're not. So this one has a big void. This one's beautiful. Let's short under 124.20. So that, and I see this is another great example of it's not far from the 20, and it has the nice arrangement of bearish bars that I like. All right, so that, yeah, so as a new trade, and we said it's going to be much harder finding new trades, shorts, that is. Look, you all, I even had this. Look, Greg, I even had this loaded, ready to go. Look at that. Well, the stop's wrong, but so that this was just a template I had to get ready. Wow, 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 wow. All right, under 124. LDOS. 1, 2, 3, breakdown. One 736.
Hicks Sporting Goods, DKS is a 123. It's trading inside of yesterday's range at the moment.
Don't say it. Don't say it, Alex. It's too early. Description. Yeah, but that's so dumb. That's it's an excellent example of different time frames. The daily as a swing, there's nothing wrong with it. You gotta sit with it. But yes, well, for a day trade, these are the things that are counter trend trades that we're talking about. Let's see, AMAT's alarm went off. Wow, so there's a pseudo 123. So that's weak. So now it's a call spread candidate. I wasn't crazy about it yesterday. Like it better now. Let's see, 214 for Friday. 215's 48. $5 wide's only 33. But could turn into a short swing. You got a small little M top on the weekly. So just not going to rush into it, but yeah, let's keep it on the list. All right, LDOS triggered.